I mean, the people.
Hey everyone, welcome back to another Market Close live stream. Are we heading for a wall, or is this stock rally set to continue? That's the big question. A lot of optimism around various different stocks. I was just listening to a particular analyst talk about Macy's and how they believe that $7 of every Macy's stock is actually just real estate value, which some say could be one of the reasons they've done so phenomenally well. Kind of incredible to think about. $7 of every share of Macy potentially being real estate. I think it's pretty cool. And 40% e-commerce sales, they were saying. I was surprised by that because Walmart's only gotten to like 12 now. It's somewhere between 8 to 12%. They don't tell us. So if Macy's gotten done that well on e-commerce, I don't know. I'm surprised, but I suppose that makes sense. Anyway, so let's take a look at what's going on in the market here. I'm excited. And the big question is going to be, how is this market going to close today to prepare for jobs tomorrow? Big jobs report coming out tomorrow. Expectations all over the place, but mostly expecting about 500,000 jobs. We'll see. Ooh, take a look at this. When we go check out the indices right now, we've got the MYX, which was merged with Beachbody exercise bike here, and this beautiful, juicy. It's not that juicy actually. Price cut tag of minus 44%. Yeah, I don't know how compelling that little thing is in the corner there, but okay, all right. So let's look at the indices. We've got the Dow, pretty much stable, up 1.1%. This is about how we open. About 1% on the S&P, about 1.25% here on the Nasdaq. Russell 2000 doing exceptionally well today, pulling ahead with 1.74. Let's take a look how individual stocks are doing. Camber Energy coming in almost for a double here today after the short seller report led this stock to have and then almost have again. Still down substantially from where we were, but look at the leftover enthusiasm here to buy the dip. Really incredible, especially since this is sort of the pattern that you've got on the company here. We go to a 30-min. You could clearly see how much damage a 50% and 40% drop have done to the stock. And so even today's rally is modest compared to what's left, or what used to be, I should say. Matterport almost back up to $20. A lot of consistency in the market today. Look at those spark lines. Those spark lines pretty dang flat, a sign that you've got really a nice bounce sort of in the markets. And that bounce really taking hold as basically the markets say, hey, look, we oversold. NEO down at $33 was too cheap. Peloton down at almost $80 was too cheap. Even though I'm not the biggest fan right now of Peloton, certainly any day rather pay $80 for it than where it was around $120. Looking at the losers right now, we do have Sheeb, and the Sheeb Army unfortunately down 24.5-ish or to about 20. Well, some people call this 2,471 is sort of an easier way to read this out. The down about 18%. Some folks believe that Robinhood. I believe Robinhood announced that they're going to start taking Sheeb, and some folks say that was one of the catalysts to stay in the company, or in Sheeb rather, not the company. And as a result, maybe you have a little bit of a buy the rumor, sell the news. I still don't actually see Sheeb though under crypto. Let's see. Nope, it's not there yet. So I'm not sure if those are just rumors or if that's a confirmation yet. But let's see here. We've got, let's see, 23andMe down 3%, Smile Direct down 282. Not a lot of real pain here today. I mean, volatility's down, Sheeb's down, but beyond that, pretty relaxed day. I mean, even Dave & Buster's trying to pick up and rally into the close here. United Airlines, Spirit, Dave & Buster's, Carnival, some of these COVID-exposed stocks somewhat rotating down. But even Hippo, solidifying around this 443 level here, only down about 0.5%, 0.56%. There's Macy's down a quarter, Tattooed sitting at 18, Lucid basically flat. Affirm, kind of shocking how Affirm has given up its steam today. The company ran to $140 per share. and now we're seeing a sort of a flattening in the stock, and we're basically where we closed yesterday, which whatever is fine. I mean, the more you could solidify some of those gains from prior days, the better. But it really makes you look back at when we were at like 109 and 108 when it did some dip buying that was actually the time to do it. So I'm happy about that. I like going through times of uncertainty and fear, and even when that uncertainty and fear passes, I like going back just to explore. How much did our stocks get beaten up when there was substantial fear? Like when there was substantial China fear, Neo and all these other fear elements. Neo went down to 33. Well, is that not now a support level that you'd probably need some form of either equivalent broader market fear to get back to a 33? To me, I love that. It's if anything, it's a vote of confidence for the intrinsic value of the stocks, not what we're actually calculating as intrinsic value, but looking at it from sort of a trader's point of view of intrinsic value. Like this appears to be what the market consistently says. Okay, here when we hit this number, we buy the dip, and I like that. I like seeing that in stocks, and it's predictable patterns that I like taking advantage of when when I can. For example, one that I'm trying to take advantage of right now is Wayfair. It is up 1.14% today. But folks, take a look at the bottom blue line here where we sit, and in my opinion, this bottom blue line is a decent support level. And it could be more consistent. We've broken through it a couple times. But we've got a couple bounces over here, or a near bounce over here. This has been a pretty good support level for over 14 months. Personally, I think that's wonderful. I don't know if we're going to continue this sort of downtrend down. That's entirely possible. But I do still expect some form of a bounce to the 270s, 275 range. Usually it's back over 3, but we haven't seen back over 300 since August. But anyway, it's things like this that I'm looking for, these sort of bounce levels for entry points. See, look at Apple nearly getting to that 135 level yesterday and bouncing. We've got Wynn Resorts does not seem to go far below 80 anymore, which if you actually, yeah, if we could probably just lift our support line a little bit here. It's been very consistent around here, but even if we lifted that a tiny little bit to right there, that'd be about 69.04. Yeah, still didn't make it to that level. Still had a nice gap. So potentially moving up there on some strength. And again, you've got a lot of China fear right now, especially with the Macau gaming license for Wayfair. Yeah, somebody's asking, do I think stocks will trade sideways this month? I actually don't. I believe that we are in the kind of market that is very likely to rally once we start getting indicators of the evaporation of fear, the actual evaporation of fear, and then indicators of steady growth with hopefully somewhat reduced inflation. Now, I know that sounds crazy, somewhat reduced inflation. I'll explain that in just a moment. But look, debt ceiling, infrastructure, budget, China, tapering, all this FUD is going away and is evaporating. Tomorrow we have jobs data. On the 13th, which is next Wednesday, we have CPI data. We are expecting for CPI, and this is where I'm going to clarify what I was saying with CPI. We're expecting a year-over-year inflation read of 5.3%. That is in line with last month. I feel like the survey was just moved up a little bit. But anyway, because I thought it was 5.2, and it looks like the inflation read the survey has now been pushed up to 5.3 again, which would be stable with last month. I just want to see some form of an inflection down. I know I'm not going to get something like 3% year over year. It's just going to be crazy. Stocks would freak out. But if I could even see like a 4.9 or a 5.1, anything's better than seeing that number come in higher. That would be an issue, is if that inflation number comes in at like 5.7 or something ridiculous, or like 6%. I mean, that would just lead to instant pain in the market. And so that's next Wednesday, which I don't mind pain in the market, because I'll buy the dip. Y'all know that I'm Mr. Buy the Dip. But Look, I'm going to be transparent. Like of the options I bought in April, 70% have been very profitable. But there are some options that I'm just dying to get out of, and I would love a little bit of a rally just to be able to get out of them, and then go back to dipping if you want. It don't matter to me, because I love buying the dip. But Coinbase options, Tesla options, even though Tesla's well up in price, Tesla options have been getting hammered because of volatility crushes. So it's the way options work. Not as simple as just thinking about the price. People forget that. People think, I hear it all the time. People are like, oh, well, I'm going to buy these leaps because there's no way it's going to trade less than this price in the future or whatever. It's like, yeah, there's more that goes into options pricing than just the actual price of the underlying security. Yeah. So anyway. All right. So let's see what we got here. Right. So I don't know. Matterport's still holding on. It's very nice. Look at this. Let's go to the day here. Yeah, what a nice gain here on Matterport. Very, very nice. Good push. Looks like some institution or somebody went big there and it ran up to 2050. We did go back down to 17 briefly. But boy, oh boy, we never went back down to 15 or 16. Yeah, look at that. Yesterday we closed at 1804. It had a low at 1763. See, yesterday was the time to buy Matterport. Oh, well. How's ChargePoint doing? Sent out some alerts for some option contracts. And always looking for deals, whether they're short-term or long-term. Short-term or long-term. Wow. Can't even finish talking. It's a Thursday, Nothing really matters to me. That's a good one. See what you did there. Neo bouncing around that 36 level. Alibaba 8.08 to the upside. Pretty good. Nice bounce off of that 138. Serious Evergrande fears here. Good bounce. And looks like, how's oil doing? Kind of curious about that. Let's see here. CNBC. Volatility index down. Let's get oil here. Brent at 82.4. Nice. Yeah, definite move up here on these. And let's go to bonds to get our 10-year. Ooh, 10 years ticked up over here. Look at that. 10-year pushes 1.57 with jobs report in focus. Yeah. All right. Let's go to Bloomberg. What's going on with Mind Medicine? I never pumped Mind Medicine. So I never bought Mind Medicine. I never pumped Mind Medicine. So if you bought it and you're upset that it's down, you have to ask yourself, well, first of all, it's your problem. Let me make that really clear. But second of all, you have to ask yourself, why are you in it? Mind Medicine is a play that you have to be in because you believe that psychedelics are going to get FDA approval and that there are going to be processes for FDA regulated therapy for mental health issues or other issues. So, if your conviction is the same in that, great. If you've lost conviction in it, and now you feel like paper handing just because your risk level has gone down, right? Remember, when price goes down, risk goes down. Well, then that's your problem. All right. So U.S. loosens China grip on $46 billion lithium battery industry. Well, this is interesting. Yeah, the CEO did leave at Mind Medicine. I know. I thought that was very interesting. I also don't know why. All right. So, wait, U.S. loosens. Oh, okay. I thought it was China. Anyway, U.S. loosens China grip. Okay, it's a very confusing title because, this implies that somehow we have control over China. This title is very confusing. So let's try to understand this a little bit. The U.S. is narrowing the gap on China's dominance of the $46 billion lithium battery industry thanks to investments from Tesla and the Biden administration's push. Okay, so you're talking about competitiveness. The U.S. rose to the second spot in Bloomberg NES, which is their energy division, global lithium-ion battery supply chain ranking for both this year and the 2026 projection. Oh, that reminds me. I have to send them a quick little thing, a quick little note. Let me just at least write it down before I do. Okay. Here we go. Hey, Sean. We're hold on one sec. Perfect. Yeah, see, if I don't do it right away when I think about it, it's just like I'm never gonna end up sending that email. Like the worst thing is having like this never-ending to-do list or checklist. Just like, just do it right when you can. Otherwise, you're just never gonna do it. All right, so the energy data and analysis firm said in a Thursday report, the nation was 6th for 2020, and now we're number 2. That's great. Tesla and Asian cell makers are making significant investments in the country as government policies help establish domestic battery supply chain. The U.S. has many ingredients. Kid, you know, I really want to make a like a battery or lithium pod. Can I please ask you to spam me with lithium plays, like ticker symbols for lithium plays, please, or even just battery. Like MP Material, keep in mind, is not a battery play. It is a it is a motor play, an electric vehicle, a motor play. SLI. Okay, I'm gonna write that down. SLI. Isn't that what you do to graphic cards? I don't know. Why not include uranium? I have no idea what uranium has to do with batteries, honestly. But that might be lycee. That might be my stupidity. TMC, PLL, LIM. What's with all the L's? I mean, I guess lithium. Lycee, got it. Kevin's gonna regret asking that. Panasonic. I don't think so. NVNXF. QuantumScape. Oh, I don't know if I could touch that yet. Honestly, it's a tough one. But okay, I'm gonna write it down. DCR, DCRC, TXT. Oh, lit is the ETF. Oh, that makes. Yeah, I have heard of lit before. Okay, lit's my favorite. ABLM. Interesting. Vale. It's not like the ski resort. Lucid. I don't know that. I know they started out working on battery technology, but that's a good. I'm going to put Lucid question mark. I don't know. I don't think they're outsourcing now. I don't know. L33T. Why do I feel like that's a joke? TRQSRE. Wow, that's a lot. Ford. Pedimont. Pedmont. MTRN. Okay. All right. AMC battery division. Okay, now I'm gonna stop. The Shiba Inu battery division. That's funny. All right, so what do we got here? China continues to dominate the ranking. Thank you. I'm good with them right now. Asian nation hosts 80% of all battery cell manufacturing capacity today. Yet as governments worldwide recognize the strategic importance, blah, blah, blah. Okay. What is this? Bloomberg Hyperdrive. I will be making, by the way, a video on Rivian. I wanted to make it yesterday, but I made a Shiba Inu video, and then I went to Dave & Buster's. So, yeah. Wait. Tractors finally get the Tesla treatment? Tesla. This is interesting. Tesla tractors finally get the Tesla treatment. A crop of electric startups are hitting the $292 billion heavy machine market. Oh, wow. VS Tech. Oh, that's interesting. Electric vehicle technology has finally arrived in the heavy. Corn harvesters. CNH Industrial, a global conglomerate. I don't love buying conglomerates. It takes a lot to move them, honestly. But sometimes they can be very safe. Sometimes you can get nice dividends in them. Oh, look, they put a little screen in it. That's it. Sold. Oh, wow. Okay. Well, now I'm just looking at pictures. All right. Who's this guy? Redwood Materials. Yeah, I've heard about this one too. I'm going to write that down. Redwood Materials. Redwood Materials, the battery recycling company created by Tesla Inc. co-founder J.B. Straubel, has been keeping a big secret. It isn't really a recycling company. Sure, Redwood has risen quickly to become the biggest lithium-ion battery recycler in the U.S., but he didn't leave Tesla just to clean out America's junk drawers. His broader goal, described to Bloomberg for the first time, is to move huge chunks of battery component of the industry from Asia to the U.S. Nice. Build one of the largest battery materials factories in the world. Redwood, which currently operates 3 facilities in Nevada, searching for a location further east to build a new 1 million square foot facility at a cost of well over $1 billion. My goodness, battery manufacturing is something else, huh? By 2023, where was that? Oh, by 2030, the same facility will ramp to 500 gigawatt hours a year. That's 25 billion of cathodes a year. This is fascinating. Is this company public? Redwood Materials. Is it an American company headquartered in Nevada? Okay, I know I got the bell coming up here. No, I guess not. No, it's not. Okay. All right. Yeah, how's the SPY doing really quick? And then we'll come back to some of this research. Oh, a little bit of a rotation down. Look at that. Yeah. Ooh. Matterport staying flat. Tesla went down. No, sorry, that's AT&T. Oops. No, Tesla. Ooh, but Tesla did sell off there into the close. Goog. Also a little bit of a sell-off into the close. AMC actually went up into the close. Etsy. Wow, Etsy's back at 216. That's crazy.
And so far, because of this rally and this comeback
Listen in.
S&P 500 is looking at its best week since August, going into a Friday, of course.
All right, Dow Jones up 0.97, S&P up 0.80, Nasdaq up 1.03, Russell 2000 is up 1.60. That is the closing bell, and you can still get up to $70 in free stocks by going to metkevin.com/public. Get up to $70 in free stocks by signing up at metkevin.com/public and take advantage of the amazing coupon code linked down below for the programs on building your wealth. And if you specifically sign up for Stocks and Psychology of Money, you will get all my buy and sell alerts, whether I am trading crypto, long crypto, short crypto, stocks, options, everything. The idea is to give you ideas of potential opportunities to look for. So what else do we have? Well, that's about the close. A pretty solid day. I mean, across the board, it was pretty green. Sheep coming back up a little bit, almost at that 26 level here. You've got Hut 8 Mining that was down about 3%. Riot Blockchain, Dave & Buster's, SoFi, Netflix, Cheesecake, these guys moving down. So a lot of the recovery, as you know, basically go back out stocks. Yeah, that's a nice way to put it. And then of course a lot of positivity here, especially in the Chinese sector. But even Arcimoto up almost 4%, AMC almost up 4%. Good. I mean, overall, very good day. Should be a good day for most portfolios. So, yeah. It says the U.S. factory will produce 100 gigawatt hours of batteries by the year end 2025. That's not by 2030. They're going to ramp to 500. Oh wow, 5x by then. That's incredible. So, new industry for U.S. battery materials, cell production, automakers, refining in China, nickel over here in Russia and Eastern Europe, nickel, cobalt, lithium. Fascinating how where the nickel cobalt is, how it's all kind of like in one area. That is interesting. Cathode production. Yeah, EVs are going to be huge. I mean, we're just at the beginning of the EV movement here. But anyway, big piece over here regarding this Redwood material. So I'm going to keep that open actually. Okay, so let's do another one. What else do we have? Let's see what Financial Times. Oh, do we have earnings today? Earnings. Any chance a firm will be an acquisition target? That's going to be an expensive one, that's for sure. I don't see it, but yeah, sure. That's all. There's always a chance of that. That's always a chance. Oh, you talked about Redwood material in the stock chat, but they aren't public. However, I'll say thank you. Appreciate that. Should you buy that number, Sheeb? Jeez, yeah, I don't know. Schumer, it is at a dip. So if you wanted to buy the dip, Schumer sets up vote around 7:30 to 8 p.m. tonight on cloture and then raising the debt limit. Good. Let's do a trend analysis on Sheeb quickly. Shiba Inu. So still an RSI of 54, still relatively has some room to go compared to the burning trend. We've pushed this down to a 43. I still think there's room to go on that, but I don't know that we're really seeing it right now. See, this chart is not looking good trend-wise. This chart gives me some cause for concern. Yeah, especially since it has been an over 24-hour period here. See, 1 p.m. yesterday, we're pretty much at the same place on a search volume trend as where we were yesterday at 1 p.m. And 1 p.m. the day before that, we were lower. 1 p.m. the day before that, we were actually higher. So I generally look for the trajectories here and the trend. So I think an easier way to look at this, honestly, is to just do that. Give me one sec. That would be, there we go. It's just personally the way I like looking at it is you grab yourself an arrow or something like that. Right, I mean, here it's pretty obvious that we've got a very nice uptrend, right? That's pretty nice. And it was an accelerating uptrend. See the boost above the line here, really an accelerating uptrend. But right now, if we were to, let's see, triple touch here. See, I can't even triple touch. I have to get off this. Anyway, so this is about the trend that we've been on. But now we're starting to get a little bit of a, see if I make this one, I don't know. No, not blue, because everything is blue over here. See, now we're starting to see a little bit of that divergence to the lower side where we did have this nice uptrend. And so I do think watching social trends is extremely important for something like Sheeb right now. But look at these higher highs here. These higher highs were gorgeous. I mean, this was delicious, right? This was a very, very nice run. But right now that has stopped. And so unfortunately, I mean, it's obvious here, but we've seen a little bit more of either a flattening of the trend, if we draw like this, but potentially worse is looking at it kind of like from this point of view. So the highs being lower, the lower highs, and then having a lower low here on search trend is something I'm definitely watching. And with a momentum play, you have to remember that. That it's very, very search and trend based. Like the CEI group, yeah, they're fighting back. Yeah, no kidding. Let's just see if I type in CEI stock. Let's see, 30 days. Yeah, that's interesting. You've really got the alignment with the sell-off beginning here with the death of the trend. Because the sell-off began on the 2nd and 3rd. The short report, I think, came out on the 5th. It was either the 5th or it was the night of the 4th. But anyway, Camber, let's look at it here. So you had your first red day on the 1st, and then the 4th, and then the short report must have been on the 5th, or it came out again on the night of the 4th. But either way, the 1st and through the 4th, and you did have a weekend in there, in fairness. Oops. There we go. This was the weekend. The 2nd and 3rd was the weekend, but you did have an inflection to the downside in searches on the 1st as the stock started rotating down. You had a revival on the 5th because of that short report. Yeah, yesterday morning, right at open, a lot of searches as people were probably like, what happened, right? And surprisingly, actually seeing potentially a revival in that trend. So, but you've got to watch the trends on these sorts of stocks or even crypto. It's the same thing. So, and remember, okay, it's very important to remember when you are in a momentum play, it is not paper handing to sell. Like, the reason you are getting into it is to make a short-term profit. How are you possibly going to make a short-term profit if you don't sell, right? I'm not telling you to sell stuff. I'm just saying, like, if you're going to enter a momentum position, you should have an exit strategy, no matter what. Like, the last thing you want to be is the bag holder that tells everybody about how sad they are that, you know, a certain stock just bled out. You know, I hate to say it, but like Skills was one of those, and there are a lot of Skills bag holders. You know, it's no shade on them. I would just encourage, let it be like a learning lesson that, like, what was the trend like? Did you get into it thinking it was fundamentally just this perfect long-term play? And when it was really blown up by momentum. Look, I've been a victim of that. Okay, I'm not immune to this stuff. I loved my fundamental thesis for buying Lucid at $17. I bought Lucid at $17. The damn thing ran to $64 and I didn't sell it. You know, that was stupid. This was the momentum pump here. That $30 to $65, that was the momentum pump. What are you gonna do though? You know, that kind of stuff happens. So anyway. So, yeah, let's listen to this commentary here on will the jobs report keep the taper on track?
Still a little bit more of that tapering that has to get priced in, but I'm also watching the front end because it's really now hikes. I think the market will get past tapering. Now it's going to be, when does the Fed begin the hiking cycle? Chair Powell can keep telling us that the two policies are far apart, but they are somewhat linked. You know, both are economic outlook based policies. So if the Fed is tapering faster, if inflation is high, do they start to hike sooner? And I think the market's pricing in the first rate hike at the end of next year. We think that's a very optimistic outlook on the economy. If that,
all right, this is boring. Yeah, yeah, Zom bag holders, whatever, right? There's no end to them. I mean, Newegg. This is very true too. Traders be like, I'll day trade, and if I can't make a profit, I'll just hodl. Big mistake. Don't hodl trader stocks. Like, whatever you do not hodl trader stocks. Let somebody else hodl that stuff. Like, and it's okay. Like, even if right now you're hodling a trader stock and you feel like you got burned by a momentum play and you didn't sell it early enough, and you're like, oh well, if it could just get back to this level. Look, if you're a trader, put your money to use on something else. But yeah, have a written strategy. That's I've just found that to be very, very good. That way, you know, you set yourself up a criteria like, hey, if I move it, if I get into something and it starts stagnating, the momentum goes away, or it starts dropping, is that my sign? Is that my cue? My moment to bail? And in many cases, it can be. And then you have to be okay walking away from that and not complaining in the event that it runs again, which is also possible. All right, what do we got over here? Bitcoin. Bitcoin sitting at just below 54,000. So a little bit of a relaxation here on Bitcoin, with Ethereum at 3610. Cardano setting at 229. SHIB back to 24. Not much movement here. And oh, I forgot to change the screen. Is the market closed Monday? Why would it be? NYSE closure calendar. I don't think so, but let me see. It is no. The next stock market closure is not until Thursday the 25th, and then Friday, December 24th for Christmas Eve. Although I think that could be a half day. Markets will close early. Oh, Thanksgiving. Oh, Black Friday. The stock market will close early. Okay, got it. Yeah. Is that true? Yeah, 2021. Yeah, that is what it says. Okay. All right. Columbus Day, is that what's coming up? No, the NYSE is not going to be closed on Columbus Day. Will you sell your crypto on momentum before it goes down during the cycle? Well, I don't necessarily believe it's going to go down during the cycle through like a crypto winter or whatever. But yeah, I mean, look, if we get an insane run up, like if Bitcoin hit 100,000, this year. Personally, I think that would be a little excessive and ahead of curve, and that could potentially tempt me, especially if we get to where we start seeing more of an inflection in inflation, which everybody's still waiting for. Ooh, you have a small amount left invested in a poor stock. Maybe better sell it and buy a stock with more potential. Okay, somebody's writing this. Yeah. So, all right. Let's get some more news. Let's go to like Financial Times and stuff. Let's see, Wall Street Journal. Let's see what they got. They got any cool pieces for us? You know what we should also do? We should put this in sort of our rotation as Seeking Alpha. Hashtag not sponsored. Let me just log in really quick. Because some of their analysis is pretty good. And it's just random authors. Well, I'm sure they're not random, but they're authors. Trending news. Hyundai's Evolve. Okay. Nordic Track parent. iFit halts IPO. Yeah, probably because of a lack of demand, honestly. The fitness stocks have not been very exciting. Costco starts to separate from the retail plan. Okay, well, that's something else. Okay. Alibaba is a bubble inside out. Okay. Nah, nothing very fun here. I might read this. The Trade Desk valuation one. This could be interesting. I mean, I'll just leave that open. I don't really want to read that right now with all of them. Let's get something a little bit more applicable. So stocks end higher after the debt ceiling talk. Great. Natural gas shortage sets up scramble ahead of winter. Well, yeah, no kidding. That's a good point. Oh, hold on a sec.
Great. Keeping you busy, Elon. Thank you.
Dang it.
Elon Moy.
All right, vote expected tonight at 8 p.m. I want to cover that. Can I cover that tonight? I don't see why not. I could probably cover that. That'd be cool. All right. I personally expect more green days. Yeah. I think there'll be individual bouts of volatility in between. CIA. U.S. troops secretly trained Taiwan forces amid worries over China. Proposed California measure could spark court challenges to teacher protections. Oh, there was something as well about what was it? Oh yeah, here it is. California and like a bank. Okay, but that's not so fun right now either. Worried about central banks making a mistake? They already have. Ooh, that's interesting. Here's some fascinating headlines. Okay, let's take a look at this. Of all the, I mean, I just think this is a very enticing title. Worried about central banks making a mistake. This is like suggesting that Jerome Powell could potentially make a mistake. I don't know. I don't know how I feel about that. I mean, J Powell's basically God. All right, let's see what we actually have here. Of all the dangers facing investors at the moment, few are scarier than the Federal Reserve making a mistake. The bad news, this mistake has already happened. The only question is how impactful it will be. It has been a choppy week for stocks. Okay, let's get to the point. Market's been too comfortable for some time. Yeah, I don't know about that. The market just had a sell-off. And they're saying it's because the central banks have made a blunder. When consumer price indices picked up speed earlier in the year, rate setters argued that this wasn't the kind of demand pull inflation that can be cooled with higher borrowing costs, but rather a temporary bout of cost push inflation caused by pandemic reopening. These temporary issues have persisted. So here comes another one of those persistent inflation complaints. Okay. As a result, the Fed has started to change its tune. Also true, though. All right, lifting rates in 2022. Also true. They have moved that up. That used to be no rate increases until 23. The shift is even more striking elsewhere. Based on what officials have said, investors now price in 3 rate increases by the Bank of England next year, when a month ago only one was uncertain. Also true. No matter which side of the transitory inflation debate investors fall on, the inevitable conclusion is that Officials were either wrong before and should have started tightening earlier, or are wrong now. By speaking of, I think a lot of our Fed officials were wrong about how quickly inflation would subside, but I still think it will. And so I don't know. And one of the things that we always want to consider too is with monetary policy, you have this lagging impact. It's not like a stimulus package where you could send out checks in 2 weeks and people start spending the money right away. With the Federal Reserve, you're in much more of a lag situation where if you raise rates now, you're affecting the market 18 months from now, right? Okay, portfolio managers need to consider all possibilities. Those who believe officials are behind the curve have already begun piling into inflation-protected bonds. They should avoid regular bonds and shares that benefit from rising yields. But a more likely scenario, which the market is pricing in, is that inflationary is temporary. This isn't the 1970s. Despite rising input costs, most companies' profit margins aren't being severely squeezed. Also true. Nor are labor union strikes threatening a trigger or to trigger a wage spiral. Officials may soon realize that interest rates are powerless to fix supply bottlenecks and a poor way to curb housing excess. Well, I don't know. You get mortgage rates up and you're gonna settle real estate down pretty fast. Even if hawkish rate setters get their way, there is a big chance they will eventually have to reverse course, given the labor markets around the world are still affected. Yeah, that's the thing. If they raise rates too soon, they might have to U-turn like they did in 2018. You know, this would imply not giving up on technology stocks, buying treasuries if yields go higher, and of course, preparing for a bumpy road. Options that insure against volatility are expensive, but investors may want to consider them as a hedge anyway. A market in which monetary policy has the potential to seesaw should, above all, be a more turbulent one. Well, yeah. Okay, I mean, that was kind of boring. They basically said, hey, the inflation is either going to be temporary or not, but we're going to have volatility. Yeah. Come on, man. Oh, well. I thought it had potential. I was wrong. All right. Chinese property bonds tumble again. Okay. Kind of used to that at this point. That's what happens with news, too. It's like you see the same thing over and over, like Evergrande. At some point, it's just like, okay, I got it. Oh, yeah, this is what we need. Who wants to buy an estate? Italy-inspired California home with retractable roof. No way. Wow. Holy moly. Look at this thing. Who wants to look at the Zillow? Oh, look at the chess pieces. They're stone. How do you have stone chess pieces? 14,000 feet? Oh my gosh. 1,100 square foot wine room. I mean, that's bigger than my first house, and it's a wine room. I want to see it now. I don't know how to Calabasas, something like that. Whatever. There we go. Sort by. See if it's on Zillow. Price. Move boundary. No, okay, we can keep Calabasas as the boundary. And let's just do, I don't know, just a nominal 20 million plus. I actually don't even see it on Zillow. But you've got a bunch of $20 million properties here. Look at this. I don't know how we've devolved into just looking at real estate now, but my gosh, look at that. Gee whiz. Oh, that's so cool. I don't know how I feel about the swans over here, but wow. Oh my gosh, a blue room. A green room. It's like the White House. I mean, that's cool. Wow. I wonder what your mortgage payment would be. Mortgage calculator. Okay, so I don't know. Say you put 25% down. That's or say you put 20% down. That's that'd be $24 million, assuming you paid full price. Your monthly payment would be $108,000, not including property taxes. Property taxes on 30 million would be somewhere around $30,000 a month in property taxes. So you're probably, with the maintenance of this thing, you're probably paying about $150,000 a month for one of these $30 million estates. So if you have 150 grand a month to spend on housing, here you go, folks. Calabasas has answers for you. My gosh. I don't even know how I would feel about what is that? A boulangerie? Boulangerie. A boulangerie? A bakery? A bakery. Okay. Anyway, we'll get back to stocks. Where were we? Let's go to Financial Times. Somebody's saying, thanks for showing me a house I can't afford. Don't you know I'm a real estate broker? Just kidding. As if that's what real estate brokers do. Come on, you could do it. It's only a little bit above. Senate reaches deal. Okay, we talked about this. Wow. Nominal news day. Moderna plans Africa factory as vaccine maker battles criticism. Okay, ECB minutes reveal concern over Eurozone. Ooh, the Eurozone is freaking out about inflation. The Eurozone hasn't had inflation in like forever. Let's check it out. European Central Bank complaining about inflation. All right. Some European Central Bank policymakers have argued it is underestimating future inflation, warned about the risk of a regime shift in prices, and pushed for a bigger cut in asset purchases than it ultimately decided. Ooh, I love this talk about a potential regime shift, just that like the structural components of our economy essentially could collapse, and we could see much higher inflation for the longer term. These concerns about upside risk to inflation were revealed in the minutes of the September meeting. The debate highlights how a recent rise in Eurozone inflation to the highest levels in more than a decade is creating tension between ECB rate setters over how long the price surge is likely to last and whether the central bank should adjust monetary policy as a result. ECB last month forecast inflation would fall from an annualized rate of 2.2% to this year's 1.7%. Okay. The minutes had agreed hump-shaped pattern of inflation. I could see that. You know, it's slower to go back down because it's more like a hump. Okay. Degree of persistence in inflation will exceed forecasts. Pay closer attention to the granular data collected from businesses, unions, households to identify structural shifts. Yeah. And that's an issue. That really is. I mean, if you just get this underlying structural would be like, hey, it's just the nature of dealing with chips now is that chips are 20% more expensive and everybody's adjusted to that. That's just the new structure. That's the new framework by which we work. Yeah, that would help solidify some inflation. Huh. All right, folks. Thanks to Sheeb, I was able to complete a trade yesterday that raised me enough money to put a down payment on a house. Congratulations. Good for you. All right, folks. It's time to go. Get your stock with Public. Go to mekevin.com/public and check out the programs down below in Building Your Wealth. And we'll see you in Discord as well to chat. So thanks so much, and we'll see you in the next one. Goodbye.